Okay, hey everybody, this is Julie. It is Friday and I'm going to do a market recap. It is still trading in the morning session, but for me, the day is over. The week is over. It's been a long week and the markets are overextended. So, as they say on a Friday, um, make like a hockey stick and get the puck out of here. So, here is the crude trade on the hurricane in the Gulf, in case you're wondering why crude rallied and then turned around and coughed it back up. It's because there's a hurricane in the Gulf and the rigs are offline as they evacuate the workers. And so some great up and downs, mainly downs, down, 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 down. Um, so these are some great entries. This is a 13 tick bar, and so that's $130 for the bar close to a tick above the prior level. And so you want a 1 to 1.5 on 1 for each signal with a runner. And then you can actually put up a lower bar too and double down on those entries, adding positions or lifting positions off. This is the consolidation, so it signals on this solver sit out of the middle. So if you want to just take all the shorts, put it on reversal short. But overall, and we have a nice pullback now. The momentum and volatility shifted, so won't be taking in any longs in that. $1,400, $1,440 it got down to. There is another level lower than this. Let's look at the daily real quick, because this is a temporary condition. And so I would expect that we're going to see a bounce either Monday at the open, Sunday night, if we get down to this trend line. This is looking like it is an ascending triangle. Take this one off. As price works its way up. Anytime we get down below this trend line, should it break down in here, then it's nothing but air, right? Down to these lows on the bottom. Oops. And this one. But I'm not expecting to see that. Actually, I'm sort of expecting a bounce somewhere after the hurricane. It's a Cat 1, so hopefully not too much damage and they can get back online. But for today, the definite trend was very obvious. We can take a look at a few other markets. The 6E may have reversed up short term. Let me get my solver working correctly in the right direction. So if you wanted to go long when it flipped over, there were some good entries. Likewise, inflections long or reversals long, oops, would get you some good entries going in that direction. I always like waiting for it to get above the close. I don't like trading long into the close, but it certainly can't cross the close until it gets there. But that first pullback, that pullback is what I'm trying to avoid. So here's your great entry on this 6E. And I think it's going to continue to move up. Got a bit of volatility here on the shorter time frame. And let's look at some other markets. The NASDAQ, I'm telling you what, that Mr. Cohn, the market whisperer, non-farm payrolls this morning came out a negative. Jobs number, which was below expectations. And he was able to talk to the market, and it really rallied on his comments. So it was shaky, but overall, long as the direction you wanted to go after Mr. Cohn got on TV. Short until then, just this little place here. But you can see that the direction guide is empty, emphasizing that this is really a range day, range up. Take this fib off of here. And again, figure out the direction that you want to go. Long or short, set it up. Hopefully get a trend. That's what it looks like. And otherwise, set it to try to go in the direction that the market is moving and take advantage of these 1 to 1.5s. Profit targets. With a runner or extra squeeze, trailing. Looks like he would have gotten stopped out here. But for that runner, the markets really did pick up a little bit today, but it has been extremely low volatility this week. Very, very difficult to trade. And the beginning of the week was very difficult with the events that occurred. Double sadness with Las Vegas and Tom Petty's passing. So really not a great week emotionally to trade. So that's why it's good to have a system, whatever your system is, and try to adhere to some entries that have a little bit of a higher time frame bias and get in the market in that direction when it's moving up. That's what you want to do. And like I said, try for these 1 to 1.5s. That would have been a stop out. This would have been let's see, that would have been a stop out. That was a winner. You just try to get more winners than losers, and if you can stay within the higher time frame bar movement and hit the market either on your higher time frame chart or go in on your lower time frame and maybe add a contract or be cognizant of taking a contract off on the lower time frame. Managing the risk correctly. So that's all I have for you today. Have a great weekend. I appreciate it, and take care. See you next week.